Hi, good afternoon. I want to make a tutorial in continuation to the management accounting. This is the second tutorial that I'm making. We are still on cost classification, okay? Cost classification. So I have a number of costs which I want to identify. Don't worry, if anything is strange for now, they'll make sense as we keep going. There are so many different costs that we can talk about that we'll talk about under this same topic. Okay, so my number A, I have the basic pay of direct workers. What type of a cost is this one? So this one is a direct cost, okay? Direct cost. This one is a direct cost. Then the next one is the basic pay of indirect workers. Indirect workers, the basic pay of indirect workers. So this one is an indirect cost. Indirect cost. This will make sense where we are going, but for now, this is what you need to understand. Overtime premium. That's my number C. So overtime premium either paid to direct workers or indirect workers. It's an indirect cost. Indirect cost, unless on instances where the owner of a product that you're manufacturing requests for workers to work overtime. That's when overtime is treated to be that's when overtime premium is treated to be a direct cost. But if it's the overtime from the company, from the business, it will be treated as an indirect cost. I have more examples which will make sense even with figures where we will be working out something, so you understand this as time goes. Okay, bonus payments, these are indirect costs. That's my number D. Indirect cost. Indirect cost, that's the bonus payments. And then my number E is a social insurance contribution. Social insurance contribution. They are also indirect costs, okay? Then we have my number F, idle time. This one is an overhead cost, which is also an indirect cost. Okay. Then my number G, work on installation of equipment. Work on installation of equipment. This one will be added to the equipment total cost, okay? So it has nothing to do with the direct cost, indirect cost, or direct expenses. This one will be added to the equipment total cost. Okay? So it will be treated as a capital cost. Capital cost. We'll clarify more on these other strange terms. For now, I hope you get the intention, the concept this tutorial is intended for. Okay. Okay, so let's say somebody made an order and you need to manufacture a product. Like I gave in the previous example, you want to make a plastic cup. So let's say the client has made an order with you and you are to make a plastic cup. So the direct costs that you are seeing here, the direct materials, direct labor, and direct expenses. So let's say you have direct materials. The direct materials is this one, and direct labor and direct expenses. When you add these, you're going to have prime cost here. Okay, so the cost of the direct costs, which is direct materials, direct labor, direct expenses, they make what we call prime cost. Okay, prime cost. Then when you add production overheads, you add here, you are going to have production cost. The amount will come there. Okay, production cost. When you add production overheads to the prime cost, you're going to have production cost. And then when you add other overheads or non-production overheads, okay, when you add these, you're going to come to what we are calling total cost. And then when you add profit or markup, this is your profit, you add your profit, then you're going to have the selling price here. Okay, so we have the direct cost, which makes up the prime cost, and then when you add the production overheads, you're going to have the production total cost. Okay, and then when you add any other overheads apart from production overheads, which is here, you're going to have the total cost. Now that total cost, that's the one you add your profit markup percentage. How much is your percentage for the profit? This is the figure, and then that's how you arrive at the selling price. This is the price you are going to sell this product that you are making, in this case the plastic cup. So I'll give more detailed examples as we go. Expect a bit of new terms which I'll explain in the notes, but they are simple to understand. And then practically we'll do a more detailed practical following this. So this is what we call job costing card. If you want job costing card, the items in here, they are the items we follow and consider when costing that job that you are doing and arriving at the selling price. How much you'll be selling that item that you've made in your production department. It's been Moses Spiri. Thank you so much for your time.